So let's see, how will my business make money? This is just an overview, and we start going slowly by slowly, into a funnel of into the different areas. Obviously, you need to understand your target market. Other consultants and other presenters are telling you about that. Understanding your target market, pricing your product competitively, which is something we'll cover today. Clear understanding of the financials of the company. Yes, you're going to get an overview, but there's other sections that they may present in the future, but you will get to understand some of the financials of your business. Obviously, understanding profitability. What are the drivers in increasing your profit, and obviously expense control. Okay. Let's start with the financial statement. There are three basic financial statements that usually an accountant or bookkeeper should be providing you on a monthly basis. Okay. Obviously, you have your income statement, which is the same as profit or loss, cash flow statement, which a lot of accountants do not provide you, and the balance sheet. The balance sheet is what you have, what you owe, and what's really worth of your business. The reason the cash flow they don't provide you is because it tends to confuse business owners. It doesn't matter in which business, whether it be retail or wholesale or whatever, tend to confuse. But a lot of business owner will say, Raju, I made $30,000 profit, $50,000 profit. Where's the money? Show me the money. And this statement will tell you where the money was spent. So accountants will give you this and this, because also another area is the IRS also cares about this and this. Okay, they tax you on those. Whether you have money or not, or you spend the money efficiently or not, which is this, IRS don't care. Who cares? Whether you have money or not, you care. And this is the one that you should be asking your accountant to give you, because this is how your money was spent. It combines income statement and balance sheet together into one statement. Okay, so this is how you say, okay, I made $50,000. Oh, I spent on this. I took money for this. I did this for myself. I did, you see, I spent money for this new display racks and all of that. So this is how I spent too much money on inventory. Whatever the case may be, it will tell you here what's going on in your business combined. Okay. Now, for our purpose of our conversation today and presentation, we're going to concentrate mostly on this side, on the income statement, which is what most of you will be dealing on a daily basis, weekly basis, and monthly basis. So this is how a sample profit and loss looks like. Okay, I'm going to dive in straight into it. You have the different revenues that you want. In this case, it's a flower shop, business to consumer, business to business, and business to government. So this person or this business owner wanted to find out how much money is the revenues are coming from these three different segments. And this is the 2022. It's just a simple P&L. Obviously, this is the cost of goods sold, the flowers and the bases that they consider part of your cost of goods sold. Obviously, these are all the other expenses that you may have for the business to run the business. It's a small, business. And obviously, at the end, you have your federal income taxes, state income, local, and net profit after tax. This is how it should look like, depending on the business and depending on the industries and everything. Some of this may change, may look more complicated, maybe less complicated, depending on the business that you have. But basically, this is how it should look for a retailer, more or less. Okay, this is the profit and loss. And there's no inventory here. There's nothing of that. Inventories do not get into here in any form. This person has a delivery that she provides, So if you look at it from that perspective, there is some cost associated with that, which a lot of retailers may not have. Now, there is one piece here that I look at, gross profit, which is sold 162, 38,123. This is the gross profit. This is another way of putting it. I want to know how much what is my percent, my cost, or my contribution, my gross margin on that. And like I said, I learned about gross margin when I was 8 years old. And the example, and I hope this example will hone the point. I was following my grandfather in one of the retail location, and he was sitting and he told me, I was around 8 years old. He told me, you see your uncle and your dad and all of that running around? Yes. I said, what, why are they running around? They're running around because he told them there was a special bonus or prize for the one who sells the product for the most price. For the most, not the one who sells the most, but for the most price, highest price possible. So there was a perfume bottle that they used to carry, and he wanted to promote that perfume product, and he wanted to find out who could sell it for the most. I had this conversation with my uncle maybe a year and a half during pandemic in one of our family Zoom calls, and he said, "Yeah, I remember that day. That perfume was about $2 or $3 in cost, and normal price would have been about $6." And to give you an idea, I was there and the price went up to about $8 or $9. But obviously my grandfather left and I followed him home. And later my uncle told me, yeah, he remembers that exact moment because that perfume sold for $17. The same exact bottle was being sold at $17. So a product of $2 or $3 sold for $17. That is the margin of that is what we are talking about. What is the margin that you're getting from that cost of that product? So that is a very, very essential. I have clients in the SBDC that they look at the gross margin in QuickBooks. Can be done. QuickBooks has it. All the softwares, most of the softwares would have it, if not all, that you can do on a daily basis. Look all the products you sold and you see what was the gross margin on those products that you sold for the day. So I have a client that does every day before he goes home, he looks at his margin, and if he didn't make something, he will change it. When you go buy a car, the general managers and the sales managers and all of that are looking at the gross margin per vehicle.
Raju, Aurelina raised her hand. Aurelina, do you have a question or comment?
Yes, I have a question, but I think he freeze.
Ah.
All of that is driven by gross margin.
Raju,
Yes.
Raju,
Yes.
you are freezing. So I'm gonna ask if you want, Alexis, what can we do to put?
He just unfroze, so he's
Okay.
on.
Oh, I no, because usually I get a notice that I'm frozen, but
About the gross margin, you say that we reflect the after the cost, what's the price that I'm going to sell? That's what you say?
right. What happens is, looking at this specific example here, it says I sold $162,000. For me to sell those $162,000, I had to buy product of $39,000. That gives me a margin. Okay, that gives me a margin. That's what I'm looking for. Now, the better this cost of goods sold is defined and categorized, the better the number, because the logic is if my sales go up, my cost of goods sold should also go up accordingly. If it comes down, it should come down in the same parallel way. Okay, and we will see some example today, and you can see how we play that game and how you can use that as a tool to grow your business. Okay, but the key here is that you need to do this. Now, can we modify some of this to make it more efficient? Yeah, there's always going to be some efficiency that you can make in getting this better. But at the same time, you have to look at it from a perspective of, I need to be able to correlate the both of these two areas. So they should mirror each other. It will never mirror 100%, but it'd be very close to mirror both, up and down. Okay. So this is the gross profit. It's the cost of goods sold here. I mean, the revenue minus the cost of goods sold will give you a gross profit. Margin is just in a percentage base. So all we're doing is changing into a percentage.
And
Okay.
I think, Raju, one thing that we can talk here is the way to grow your business is either you sell more to the people that you're currently selling, you sell to new people what you sell, or that is what Raju is conveying with the gross profit, is that you can sell at a higher price. So there are three ways to grow your business. But what is very interesting is sometimes we tend to think that we have to sell and sell and sell more. Even sometimes we as small businesses sell at a lower price.
Right.
But the reality is the third and very important way to grow is to sell at a higher price.
Correct.
That's what the grandpa was doing, Raju's
Yeah, he
grandpa.
was trying to sell it for the most price.
Yeah.
So that means he doesn't have to buy 50 units of different kinds. He could buy only 10 units of every kind. And he was fine. He could, and that's ultimately what you want to do. You want to be able to get the most money and make the least amount of effort. Okay. So why is it important? Requires you to cost out what you're selling. I need to cost every piece of product of that product to make that sales happen. And we're going to run through an example, real simple example of a cup of coffee. Just going to work as an example of a cup of coffee. And then you will see how it kind of works out. As you determine the gross price of what you're selling, it will tell you what your gross price is of what you're selling. You know the units, you know all of that, and suddenly you're going to say, man, I'm selling it too cheap, or I'm selling it too expensive. Why am I losing business? Why am I not closing business? It allows you to give you a lot of information. It's a very powerful number, but very is neglected in small business. Okay, what impacts gross profit? Obviously, any discount you give, if you're losing product, if your cost price increases, if your product went up, your flowers went up, or your vases went up, incorrectly charging. Oh, I was supposed to charge him $3 for this, but I only charged him $2. Guess what? You made a mistake, but it's costing you money. Switching to low margin. Well, I'm going to drop my pricing and everything and see, and wastage, product you close. In a lot of, like in our case of the flower, they do throw a lot of product away. So wastage can become an issue. Okay. So these are some of the major factors that affect gross margin. Now, as your business grows, you're going to track all of this. And when I started my business, I didn't have a lot of breakdowns in my gross cost of goods sold. But as I grew my business, I used to have a line item that says discounting. I had a line item that says wastage. I had a cost price increases on costs and everything. I had ways of looking at it. So when I looked at my numbers, I said, that's what happened. And that's what you want. You want information. Information is power. And that's what you need to be able to do. Initially, you're not going to do all of it, but you're going to pick a couple of things that it's important for your business. Now let's look at what can affect profitability. Obviously, volume, price, fixed cost, and variable cost. Variable costs incur directly in producing or buying the product and services you sell. What do I mean? That's basically your cost of goods sold. This is your overhead. Okay. This is the variable cost, is your cost of goods sold. Anything. So your credit card would go there. Your commissions, you're paying commission, would go under variable cost. All of those small pieces will go here. Some of you are most probably selling online. Almost everybody is selling today online. All the fees that the eBays and the Amazon of the world are variable cost. Okay, they will affect your overall margin. Okay, for every product, anybody selling food is using Uber Eats or DoorDash or Grubhub. All of those have different various fees. You will have to include them in here. This is where you will have your numbers on that. The fixed cost is whatever it's your overhead. I mean, insurance, light, telephone, basic rent, All of that will be your part of your fixed costs. And these are the variables that you need to understand and know how and what will drive your profitability. Okay, so cost structures. Now we're looking at more detail. What are my structures? Okay, fixed costs are, don't worry about this. This is coming from your accountant, amortization, depreciation, but obviously insurance, interest, any taxes, rent, salary, utilities are things that will affect your costs. And if you realize it, you can't do much here. This is very static. It's not going to change much. So you're kind of hooked to what you already agreed to. You can't do too much of any of that or changes of any of that because it's dictated by what you already committed or what the market is going through. Okay. Variable cost is where you can make direct impact. I had a class yesterday in Miami-Dade for the SBA, and we did touch specifically on these variable costs because variable cost is what can go up and down depending on how much you sell. The more you sell, some of this product will be incurred. If you sell very little, obviously they will not incur these costs to that level. So it does reflect. So any materials that you have, commission, affiliate payment, like your Uber and your eBays and Amazon fees, all of those that are affiliated because you're selling those products. And obviously any shipping costs or anything. Well, I have to send it to the fulfillment center. Well, that cost of sending it to the fulfillment center is a cost that you're going to have to incur. You're paying for it. Amazon is not paying for it. Your warehousing cost is a cost that you may have to include it here, but definitely on your overhead. So understanding what impacts your cost structures or your costs will allow you to define what your gross margin is. Again, we go back to the gross margin. I want to be able to identify what is affecting my sales directly. So we're going to do a small exercise right now, okay? And we're going to cover, I'm giving you 3 years of this Zen Flower. She started 3 years ago, the business, in 2020, 21, and 22. And these are her numbers that changed over the 3 years. Now, I want to ask you, tell me the gross margin for all 3 years provided. Actually, before we start doing this, I have a question for everybody. And Adriana, maybe you can help me on this one, okay? Everybody,
Yes.
From 1 to 10, tell me in your analysis, in your own point of view, how strong or how confident you are on the financial acumen. How strong do you feel about, profit and loss and things like that?
Yeah. So if you feel very strong on finance, put 10.
Yeah.
If you are dominating the terms, not an expert, let's say 8. If you are so-so, 5. If you feel weak, 3 or less. And this is to really help you. So feel free to put how you feel.
Yeah, but that would help me in making sure that, I'm not requesting too much from the participant. It gives me a gauge if I need to maybe break it down a little bit more or less, to make sure. The goal here is for you to
I
get.
have a quick question.
Okay.
Raju, it's nice to see you. When I first came last year, your class made me scared, but not now.
But why would it make you scared? It's not. I think so. What I'm hoping is that I'm opening up your vision to what needs to happen so you can work smart, not hard.
Thank you. Thank you for that.
So Raju, I'm going to propose to us a second question because most of the group is about between 3 to 6. So what is what you find more challenging when we are talking about finance? Just put in one line. Is the type of the terms, maybe how to find out that is Excel and you want to understand more in words. What is it that you find challenging?
I have I like the one that says depends on the day. I like that one. Don't worry, I feel like that some days on finance myself.
No, for instance, I have to be honest. I'm very good in a strategy, but I'm very bad remembering names. And sometimes when I'm reviewing all these financial numbers, my broad words get switched. I'm like, what am I talking about here? So yeah. So profit and sales, Aurelina. Excel and understanding finance in general, says Danielle. Okay, thank you. Who else?
I still have the question, and it's about where do we put taxes? Because I usually put my fees for shipments and also the taxes, because I sell in Amazon and eBay in my own online store, and taxes by states are different. Okay, if I sell to Ohio, if I sell to Chicago, so I put it together, and I don't know if I'm doing it correctly then.
So Raju, I'm going to propose something. Some questions like Aurelina's, maybe we can answer all these questions at the end. I'm going to start the very more specific ones. I'm going to put it in a parking lot and we will devote a section to answer all those questions. So, but I think there are questions here, like for instance, Paula has difficulties understanding the variable costs. So some others have forecasting so let's work a little bit about the finance, and don't worry, Aurelina, I have your question here.
Okay, so let's do it this way. Gross margin, remember, we looked at this number, correct? This is your gross profit, correct? So how would you get your gross margin? Obviously, you take this number divided by this number. And that will give you a percentage. Times 100 will give you a percentage.
So Raju, in the case specifically of Paula has a bakery. She makes alfajores.
Okay.
So maybe you can describe what are some of the alfajores variable costs and some of fixed costs.
Obviously, all the ingredients that you have is a cost, okay? All the packaging that you have is a cost. All the shipping that you have to bring the product in and of the ingredients or anything, or the packaging is a cost, which is cost of goods sold. Do you sell it online? Then you have those costs and fees associated with every sale that you do online. If you're doing it through Uber and all of that, those costs that you have to discount that they charge you per order and all of that is the cost of your cost of goods sold. Any credit card fees, since they're paying you on credit card, again, that is cost of goods sold out of your, but you don't incur any of that unless somebody buys from you. Maybe the easiest way for you to grasp it is, I sold this product, everything that goes into this product plus how I have to supply it to you becomes a cost of goods sold. What do I have to do to get it to you, the product, plus what it costs me to make that product? So in what we call the fixed expense, sometimes it's easier to start with the fixed expense and you say, okay, salaries is a salary. Now, what happens if I'm paying what you call commission and, well, that doesn't exist in retail, but most of the time you may have to pay a commission to somebody who is making sales for you or getting you, events and things like that. So then that commission becomes part of your cost of goods sold. The salaries are not cost of goods sold, even if you're the owner or one of your helpers. Now, this is where sometimes it becomes tricky. If that person that you have is fixie and you're paying on all she does or he does is actually make alfajores, guess what? Becomes cost of goods sold. Okay, because that's your labor cost for making that product. Okay. Did that help?
Paula, did that? Yeah.
Paula, did that help
Yes.
you, Paula?
Yes, yes. Hi, thank you. Yeah, I was wondering if we have like a formula or something like to say, okay, yes, I have all that expenses that you mentioned before, online store, shipping, employees, rent, insurance, everything. So how do I know if, let's say, to put an example, if my product is $1 in ingredients, right? How do I know how much I'm spending in rent and insurance and everything else and shipping and everything else if it's a formula to calculate that per product? So if
No. Let me stop you there. You do not do insurance and rent and all of that per product. That is not, we are talking about right here. Rent and
Okay.
all of this is down here. That doesn't count. That's a fixed cost. They don't change. This is what,
okay,
you know, all your ingredients and everything. So you don't see me putting the insurance up here. You don't see me putting the loan interest up here. You don't see me putting marketing and advertising in there. This is specifically up here. We're talking about this and how you get this number.
okay,
So the insurance
oh, okay,
and the rent and utilities and all of that, you do not break it by product. No.
No, but I think, Raju, her question is how much do I charge in addition in my product to include the fixed costs?
Okay.
to
what
cover
happened-
all
this
the
is
expenses.
okay. Now that's bullet point number 3. Overhead percentage, overhead burden. What is the overall expenses in percentage? This is what comes up. This is the number that you need. All of these, this $82,000 or $47,000 or $32,000 has a percentage in relation to the 60, 100, and 162.
So
That is what you
let's,
add.
Paula, Raju's going to explain that, but I wanted you to ask your question because I think it is a question that all of you have in your head.
Right.
So I'm glad that you asked about it because now Raju is going to help you how to calculate that.
Okay. So
Okay,
if you want to
Thank you
know
so
how
much.
much overhead it is for every product that you have to make, you're not going to do it by alfajor or by business or not. You want to know how much of every product that you do, your pricing and everything goes into all of it. So what happens is I take the 123 and I have it here. Actually, I did the math before, obviously joining the class. We sent you out this, but I was hoping that, you know, 123, 424, you divide it by 162. That gives you, give me 1 second.
Alexis, why don't you give me a co-host so I can write the numbers in with annotate while Raju talks.
Yeah. So this number, 123 divided by 162, gives you 76%. Okay? So 76% is your gross margin. This 82,000 is 50.9%. Okay? So what does that mean? When you come up with your pricing, you're going to say, out of every dollar that I get, $1 that I get, 24% will go here. The 38,976 is 24%. 24 cents will go to these products. And then 50.9, almost 51% will go down here. So 51 plus 24 is about 80, close to 80, correct? This 40,000 is 20%. You're making a profit of 20%. So from every dollar, 24% goes to your ingredients and everything. Overhead and rent and everything will go up to 51%. And that leaves you 20%. That's profit.
Sorry, Raju, I was trying to write, but it's not letting me. to annotate. I don't know why, Alexis. Do you know why?
I'm not sure. The only thing I can think is maybe because we're recording that you can't annotate during, but you have the host.
Can you make me
You
host?
already have it. Yes.
Yeah.
Okay, don't worry. Go ahead, Raj. So
Adriana,
you
I believe
understand
that
this? Make it very complicated. But you do have a percentage. You do have this number. So you know 51 cents of that dollar will go to cover overhead. Now, how do I lower this number? I want this number to go down. It's very easy. And like Adriana mentioned earlier, you know, we have to look at the cost factors. Okay, we have cost factors here. Okay, this is this product, and we will work on the break even and see how we can play with this number. But there's also another way to drop this number. Once we drop, or how do we drop this number is by one other thing is increasing this number here, the sales. Why? Because I'm not going to make more money or salaries or services or contracted or rental related costs or interest or whatever because of selling more. I'm not going to have more rent. I'm not going to have more insurance. I'm not going to have any of that. It's going to be the same number, okay, more or less. So guess what? If I sell more, this percentage number will come down. Percentage, right? Okay, I'm distributing all of these costs. Where's okay, all of these expenses are getting distributed in a smaller amount for all the higher sales. So that's the way you kind of have to look at it from a perspective of how do I know? That's why this is the question I was going to ask. What is your operating profit for the last 3 years? So the last year I said it's 51. The previous year, if you did the same exercise with this, was 46. And this year was 54. So she went from 54 to 46 to 51. So obviously her cost is increasing as her sales are increasing per year. But you need to be able to break it down in a way that you can make it into percentage. I don't care whether this one went up by so much or this one dollar-wise. Everybody is concentrating on dollars. I'm concentrating on percentage.
Okay, Raju, we have 2 questions.
Okay.
If you want, let's answer Elmer, and then I will read in a minute Daniel's question. Elmer,
Okay.
go ahead.
Okay, yeah, hi. But then I suppose with the cost, because you have different revenues by customer, business, and government, also each item has different costs because you don't sell the same cost to the customer that you sell to the company, to a business, or to the government.
Right, you have, and that's what we'll cover in projection. We have, I mean, I can't put everything in one slide or in one piece, so we have to kind of break it up into pieces. So this is just to show you how the 3-year profit and loss look. But yes, you're correct. The pricing we do for business to consumer is one price, business to business is one price, business to government will be one price. Obviously, the amount of units that I have to sell to get these numbers will be different. All of that takes into effect, but that's how we, tomorrow's class in the projection in the morning, we will look at all of those breakdown and how do we come up with a 2023 or 2024 projection if you want to do that.
So that will come.
Yeah, we are covering that. We will cover that. And we will have that.
Daniel, go ahead with your question because I think that will be covered ahead later on, but I want Raju to know your question.
Okay, go ahead.
Hi, Raju. Hi, everybody.
Good to see you after last night.
I know. Thank you. So my question will be this. What about when we already have the cost price of the products, right? But let's say in the case that Paola and I, we go to events like pop-ups events.
Right.
So does our cost price, does it have to change because we incur into like pay the rent on the facility for the events, the gas, and then extra employees? Does the cost price of the products have to change, or does the margin is the one that it changed? I mean, I don't understand that part. Okay,
I'm going to answer you. And yes, I am going to cover in the next few slides that are coming up. I am going to answer that exact question that you have. You're getting ahead, which is good. I'm happy that all of you are thinking that way, but you got to give me some chance to get there. And you will see, because the example I'm going to show you is selling a coffee in a cart in a mall. Okay, that's the example. So, and it does have a cost of the cart, and you will see how we handle that cost. Okay. So, answering this question, the overhead percentage, we're looking at it, and like I said, it's 46% here and 51% here. Okay. Now, what is the operating profit for the last 3 years? Now, this one you should be able to get answer. Paula, do you want to or Stacy? Stacy, you've been quiet. Let's get everybody involved. Mind you, there is no perfect answer. I'm not trying to pick, but I want people to get involved and kind of help me out with this process. It's a real simple question. I'm not saying make it difficult, but you should be able to answer this one. What is in the last year, 2022? I gave the answer already. That's the problem. That's why it's a simple one. It's 51%. That's your operating. I mean, sorry, it's this one. It's this number. So 100 minus 24 minus 51, it'll give you 20%.
I'm sorry, but is
25.
before the taxes?
This is the difference. One is operating profit.
Operating profit is
And the other one is net profit.
Okay. Okay,
That's
okay,
the difference. That's why I put this example this way, because accountants will give you this number, which is fine. But if you have to pay taxes, then this is the number you really made. Accountants will stop right about here. Okay, so what I want you to understand is the way it's, I added these four steps in here so you can see the difference and understand where it's coming from. Okay, like I said, hopefully today and tomorrow, I'm not saying that you're going to, I'm hoping, and like Aurelina said, I don't want you to scare you, but I want you to open up your mind and say, you know what, I may be looking at my numbers wrong. I need to look at my numbers this way. And that's what I want. I'm hoping that that will enlighten you and everybody in this class, that that's where we are going. Okay.
So anybody has questions? Do you want Raju maybe to do the same numbers again quickly for 2021?
Okay, 2021, we're going to take the 19,850 and you're going to divide it by 100. 848, and that will give you 19.68. Okay, so let's make it for round numbers 20. Okay, you take and simplify it. You take the 47 divided by 100 comes up to 46. Sorry, 47. Make it round. And you want to know how much profit you made? Operating profit, again, operating profit. You take the 33,940 and you divide it by 100. And that will give you 34%.
Okay, so as you see, we divide everything by the revenue.
Right.
But what is giving us is of every dollar we sell, 20% goes to cost of goods sold. That means those numbers that change if I sell more or less.
Right.
47% is going to my overhead, that are those costs that don't change, my rent, the salaries, all of that. And my profit is 34. For every dollar, 34%. Remember, we're talking in percentages. Okay? So after this class, you guys are going to be experts. Now you can read a profit and loss and have really understand what is behind it. Okay, so I'm going to ask a question. Why you see that the expenses, the fixed cost, the percentage of fixed costs change for 47 to 51. So in 2022, this flower shop had less profit. You see, it was 20, it was 34, and now it's 20. Why is it making less profit? What happened in 2022?
Safely, I think so. I met you before, Safely.
So Raju already told you, look at the numbers in the expenses. What happens? Because yeah, she sell more, this company sell more, but they're making less profit. What happened?
The expenses went up.
Where did they go up?
They went up in 2022.
Because they started hiring someone or paying salaries. They had for the first time, you see, and the payroll expenses, and it went up in other lines like outside services and contractors too. So once you have those numbers that Raju just explained to you, then you can start analyzing how you are doing. You can even do this by quarter. If you work with Raju, he will ask you to do this exercise per quarter, no, Raju?
Yeah, we need to look at it, what's happening. I will, obviously you want to do some of it monthly, some of them will be quarterly, but you need to know, what I'm always saying is just look at the number, and you don't have to do these numbers. You can outsource that. Yesterday's class I did it with SBA. I told them, look, you don't have to be the accountant, you don't have to be the operational person, you don't have to be the finance and well. You need to be able to outsource that. Initially, yes, you have to do it. There's no way of getting around it. But once you start rolling and everything, you can outsource some of these tasks to somebody else, and they will do it to you and they will provide you. And guess which one is the easiest one to outsource? Accounting. Is the easiest one to outsource. Operationally, it's a little bit more difficult, and then the Amazon and the other one has worked out their plan to make that portion easier for the business owner. So guess what? Between the accounting and the operational side of it, if it's outsourced, all you got to do is concentrate on the sales part.
Yeah, but Raju, if we are not able to read this, we don't know where we stand.
Right. That's what I'm trying to say.
Learning basic math.
Right.
Okay, so go to your fifth question.
Which is the next question?
No, what is the operating profit in dollars?
Oh, what is the operating profit in 2022? Operating profit was 40,777. See, I want you to be able to, somebody or your accountant provide you this, and you should be able to read and question your accountant or your bookkeeper. You just don't have to take it for granted what they did is correct. Anybody who has worked with me in the past, I always tell them, your consultant, your accountant, your bookkeeper, you hire them. Agreed that they are more educated in certain areas or they know more about it, but they are not gods. They are human just like you and me, and they need to explain it. And I'm hired you and I'm paying you for it. So guess what? You got to do what I want. I want you to go through this, break it down. I want you to help me and look at these numbers. Why are these numbers wrong or good or bad? Okay, that is right. You as an owner who have the right to do that.
So Stacy's asking you, so net profit and operating profit is the same?
Which one? Net profit?
Net profit and operating profit.
Well, what happens is operating profit is not net profit. you might want to do it before taxes. Operating profit is, I want to know if your business is making money. That's what I want to know. I don't want to add the depreciation. That's why you don't have depreciation and things like that. Okay, you don't have any of that. Interest charges, it could be small interest charges that you have. I'm not worried about that. If you have major loans and this and that, yeah, then we take it out. But what we want to be able to see is operationally, is your business profitable? Is your price? Well, ultimately, I want to get, and this is what we're going to cover in the next few slides later. I want to know your financial business model. Once you have a model that you have created, that we have, you can, you'll make money exponentially. It's getting to that level that is different. Getting to that financial model takes time. And that's why consultants like me at SBDC and other locations, make sure that we get this right. Once we get this right, guess what? You can design or do things and bring new products, everything that you want to the market.
So,
Your
but Raju,
creativity opens up.
to close this, I think the confusion of Stacy is because when we say what is the operating profit in dollars, we are saying the name number that is net profit before taxes.
Right.
So I think what you're trying to say is that the word is used to define different things.
Right.
You define net profit before taxes to just talk about what is your profit before taxes, but
Right.
the operating profit is really what is that number that is bringing, that is what part of the operation is giving you profit. What percentage of the
What percentage is the operation bringing you in your business? I don't
Okay.
want all of these crazy things going out. Now, there is another concept that we call operating profit in another way, but I don't want to bring that concept because that would confuse everybody even more. But operating profit is the simplest way of putting it. What does your business do profit-wise?
So Stacy, is it clear that even though we use the same number, it means different things depending if we're talking about operating profit or net profit before taxes?
Hi, Adriana. Hi, Raju. I'm Stacy, Stacy's Naturals, and I help heroes with sensitive skin boost their confidence through my handmade natural creations.
Okay.
So I understand that you're saying the net profit is different to the operating profit, and the operating profit represents the amount, how your business is doing, but how do you calculate that?
Well, this is the number, okay? This is the number that I'm looking for you to identify. 40,777 is definitely before taxes.
That's the net profit.
Right. In this example, this is the number.
And the operating profit?
Is the same. In this case, the operating profit is also 40,770.
In this case.
In this case.
Okay.
That's why I purposely asked that question, and not to confuse you, but to actually have that exact question that you did ask. Okay. I want to see if you're paying attention. You guys are paying attention. Okay. And Stacy, I applaud you for being that, sharp on these things. But that's exactly the point, because people will confuse it. Here in this specific case, this is a number, and both of them is one and the same.
Yeah, it's the same number, but when a bank asks you, they are looking for different answers.
Okay.
But it's that number.
Okay. Thank you.
What is the profit coming from the operation, or what is the net profit before tax?
Thank you, Stacy, for that question. Technical at times, Okay, so let's look at the.
You have to stop annotate. You have to close annotate. Yeah.
Now, how do we evaluate profitability for multiple product services in one business? Let's start with the break-even. I thought I mentioned break-even is another tool that you can use, and is a very powerful tool or number that you can use to find out what needs to happen in your business. Okay. Now, Break even, I can do it by volume. I can know how much units I need to sell. In the case of Paula, that I already know you do alfajores, I need to find out where they are because I do like alfajores. And price, at what price level do you need to be? Gross revenue for the entire company. And also you can do it by product line. So if you want to do alfajores and you want to do cakes and you want to do other products, you can do it also break even based on that. It's more difficult, you need more data, but you can do it by revenue and product line, okay? But overall, you need to know what your business is. This is where most of us will be at, okay? What does break even mean? Break even means that I am not losing money and I'm not making money. So I need to know how much dollars I have to sell, how much units I have to sell, and how much at what price I have to sell. So I don't lose money, but I don't make money. Okay? And it doesn't mean that it's a specific price. It's an average price. Okay? I may give you a little bit of a discount. I'll charge somebody else a little bit more, but average, you need to know what your average selling price is based on that. So where sales and volume, your gross profit covers all your expenses. Again, we look at it from an annotation point of view. I don't know how I know.
You have to maybe click the three dots and look for annotate to find the pen.
Yeah, I have it. I know that, but which is
the pen to write?
Yeah,
on
the
the
pen.
pen.
That's what I'm looking for. Why is it not there?
If
Well,
you-
I'm going to show you the.
So maybe
sometimes it shows up under more. So if you click more, it'll show you.
I had it a few minutes ago, and now it doesn't show up.
If you hover at the bottom as well, the pen will pop up and say annotate for you.
no, but
Oh,
he's
there
saying
it is. I think so. Now I got it. Now,
There you go.
Thanks. Thank
No
you.
problem.
Okay, again, we go back to the gross margin. Is equal to total expenses. Okay. They need to be equal. So this number and this number need to be equal. And total fixed expenses, okay, need to be equal. But in this example, you can see they're not equal. Okay, in this example, you see it's not equal. But guess what? I do have the percentage here. So I take the 165 and I divide it by 43.6. I need to sell $378,000 to break even. And this rate at 347, I am losing money.
Raju, I think your annotate has something that is erasing every time you write.
Yeah, that's what I'm saying. I don't know why is it. I don't know.
Just maybe they have different options to annotate. Oh, that's a line.
I don't know.
Check if the basket with the erase is activated.
Yeah. Make sure the eraser isn't activated.
Oh, okay. Looks like that is.
Okay.
But don't worry, continue.
I'm gonna
Anyway,
continue.
when you mark, we are able to see exactly what you're talking about.
Right. I'm going to mark it the way I normally. So I can do this. As you can see here, we have taken the 151. Okay. You're taking the 151 and you divide, the 165 and you divide it by 43. It will give you 378. So I need to sell 378 to break even, not 347. Otherwise, if I go below that number, I'm going to lose money.
So
This
Raju,
is- yeah.
let's remind, I think it was nice when you can write, if you can write anyway. Just go step by step again. So how we got the profit margin, and then how we get the fixed operating expenses, the total fixed. So they know where these two numbers came.
Well, we can go back to
So
in the
just tell
future-
us, refresh us again. So gross margin is the formula, just so
Yeah, is
everybody's
this-
refreshed. Don't worry. Sorry, Raju. I think you have to put the pen again.
Yeah, I'm trying to, I'm going back to the mouse. I'm looking at the 165, okay? Remember, the formula is total expenses. Obviously, my gross margin is 151. My total expense is 165. I'm not there. So the easiest way to calculate it is you take the 165, which is your fixed expenses, you divide it by your margin, and it gives you 378. Exactly the way the formula is right here.
So yeah, remember that percentage, the 4360 is the one we just did before.
Right, with the example we just did before, which is
So cost of sales divided by annual sales revenue.
which
You
is
get the
right here.
percent.
Break even is fixed cost divided by gross margin. That's it. Is right here the formula. Now, how do you look at it graphically and how do you use it as a business is what we're going to cover right now. Break-even point will allow you to know the time period, fixed cost, and cost of goods sold. I'm not going to spend too much, but I want to show it to you in graphics. This is your sales, this is your fixed cost, and this is your variable cost. So your total cost is the addition of both. Right here is your break-even. Anything below that, you're losing money. Anything above that, you're losing money. Making money. Now, why do we do this? There's got to be a reason we do this. Can be done to examine changes in all of the assumptions made. It allows me to make changes. Allows me to say, okay, what happened if I drop my price? What happens? Obviously, you drop your price, your break-even will go higher. You need to know when, how much, units, and all that. If you raise your price, your revenue goes up, so your break-even is lower. So all of those things, now you can do it by product line, like I said, but overall, the best way to do this for small business is overall, how we look at the whole company. How are we looking as a company as a total? Okay. So this is how it looks overall. Okay. As you can see, I have variable cost here and everything, direct costs, raw materials, inventory, cost of goods sold. And these are your overhead. And I'll give you a break even. I don't want you to do this. Your accountant, your bookkeepers definitely know how to do this. You don't need to do this. I'm not trying to become. I just want you to be aware of all of these tools that you have for you to be smarter in doing business, whether it be retail or any other or distribution or anything. This is the formula for every single business. Okay. Well,
Hi.
we were going to do a breakout, but I think so we should
Raju,
know.
there is a question.
Okay.
Yeah.
Raju, hi, I'm Fabiola.
Hi.
My business is a dental supply. When you tell like you don't need about everything that you
You are in mute.
You're mute. You're
Yeah.
muted. Fabio.
sorry.
Yeah, now I can hear you now. Yeah.
Okay. When you tell like you don't need or learn about the previous slide that you put in right there. This. I have a doubt because my accounting every month, every 3 months, she only she only need my statement. I run I working with QuickBooks Online. I don't know. She don't working with QuickBooks, but it's no, I don't know, it's correct. It's only I say my statement and that's it, because I learned a lot in previous year about the QuickBooks, about the sales and profit and whatever that is accounting. But I am adult for it, and never, when I ask other people, it's okay, it's okay. I think it's not okay, because how she know what is my provider, what is my expense for myself, or
so I'm gonna say something before Raju you answer. So Raju is not saying you don't need to understand these concepts. In fact, the break even, you should review it. I think Raju, you recommend also every quarter, every month, every week.
Every month you need to do it. I will recommend every month.
What he's saying is that you can ask your accountant to do it if you don't want to do it yourselves. There's also an SBA. I can put the link for the SBA.
See, what happens is, who's the one who said your name? Is it
Fabiola?
Fabiola. I'm going to answer this in a different way also. If she's doing all your bank statements, she's doing it what we call cash basis. She's not doing accrual-based accounting. Now, the problem with that is that she's only recording what comes in and out of the business. She's only doing it for tax purposes. She's not helping you to analyze and look at your business. For that, you need to do it another way. That's why you have to do it either monthly, weekly, or nothing. Now, if you're doing it, fine, then yes, then you need to understand this because you're doing it. But my question comes up to any business owner. Are you good in this? If the answer is no, then why are you doing it? When you should be, you're in dental solution. You are strong in that. Why are you spending your own resource, which is more valuable than any other resource, into areas that you are not the strongest?
Because when you start, you need to.
I agree. I'm not going to deny that. I'm not going to deny. Like I said earlier, when you start, yes, you got to do everything. You wear different hats, no doubt about it. But as you start growing, let me put it to you another way. Even if you did it the right way and you reviewed it every 3 months or 6 months, if you made a mistake or you saw something that was not right, you're 3 or 6 months late to make any changes.
Okay.
So how did you help your own business grow and succeed if you're 3 to 6 months behind schedule?
So yeah, Fabiola, what is important to take away? And at the end of the class, I'm going to give you the link that the SBA has to calculate the break even too.
Right.
So now you learn with Raju, when you receive your profit and loss, all of you, I think for us, was very clear how to read it. Super plus. Then you should do the break even. If you feel you can ask your accountant, you can use the SBA formula, or you can do the regular formula.
And if you want, I mean, tomorrow when we cover projection and budgets and all of that, I have a spreadsheet that I use, and it is a complicated spreadsheet, but it will tell you how much you need to sell daily, weekly, monthly, all of that. It will break it out. It will tell you the break even. It will do a what if scenario. All of these things in one spreadsheet. Okay. So, but at the same time, you need to understand how everything functions to be able to use that tool. You have to understand, all of these are tools. They're not going to solve your problem. These are just tools that you can see what's happening in your business and everything. The reason I'm skipping to the other slides is because since we're talking about break even and all of that, I'm shifting a little bit the the sequence, okay, because of, of what we have. So this is a cup of coffee that I was talking to you about. How do we use how do we use the break even and all this analysis that we can use with break even? Guess what? This is somebody who's putting a cart in the mall, okay? Price per cup, planning to sell it at $2, or he's selling it at $2. Sales for volume units is 3,200. So he's making $6,400 a month, okay? Or $6,400 a weekend. However you want to do. In that time period, he's selling only $6,400. Obviously, there's some cost. The coffee, the cup, other supplies, sugar, the stirrer is 65 cents. Okay? So from every cup that he sells, which is 3,200, 65 cents goes to, we'll go 3,200 times 65 will give you 2,080. That means of every $2, 65 cents is the actual cost, the variable cost. This is your margin, and this is your gross margin of $4,300 in dollars. This is your rent, rental space, $1,200, card lease, $750, transportation, insurance, all of that. This is your cost. Guess what? They didn't make any money. I didn't I didn't lose. They're even, they're equal. Both of them are equal. Okay? At least I covered. If I sell it at $2, 3,200 units with these costs, I'm able to break even. So I have a formula that I can work with. What happens if I want to make some changes? What happens if I'm selling at $2? I sell 4,000 units. Guess what? I sold 8,000. Obviously, the 65 cents is still the same, but dollar-wise, I went up. So for selling 4,000 units, my variable cost is 2,600. So I made gross margin of 5,400. But guess what? My rent and all of the other things is still the same, $4,300, did not change. So I got a profit of $1,000. So Daniel, this answers a little bit of your question that you had earlier. Okay, now I'm going to be very creative. I'm going to do something a little bit crazy. I'm going to raise the price $2 by 25 cents. But I'm going to sell 4,000 units. And I'm going to go to my suppliers. I'm going to tell them, hey, Mr. Supplier, I want a little bit cheaper coffee. I want a cup. I got a 4 cents. So basically, I went from 65 cents to 60 cents, 5 cents. All I did was change a small percentage, correct? $2,400, $6,600 is still the same. I do $1.65 at $4, $6,600. My cost is still the same, $43.20. I just made more money. This is how we create, this is the sensitivity analysis. But the conclusion of all of this is your financial model. Once I have this model, guess what? I can do what I want. I can say, well, what happened if I charge $250? And maybe I sell less. Okay? But this is going to be the same. So I know how many units I need to do, at what price I need to be at. I can be very creative with my business. I can
I love your example, Raju, because it's exactly what I told before, the ways we can do it. Either once we know our break-even point, then I can really take those strategic decisions.
All right.
So I may need to get really more revenue. I can either increase price, I can reduce variable cost, or I can do both.
Right.
Or even, go ahead.
Yeah. The key here is I get a financial business model. I have a business model that I can work with. This is the business financial model of your product or of your business. Now, it may change in a year or two, depending how you grow your business and everything, but this is something that you can have. Do you do this every month? Yes, but not this way. You worry about this. You stop right about here. Every quarter, you do the whole piece. Okay? And you can do it monthly. If you have the if you have the infrastructure set up, you can do it. Now, in retail, let's put it back on retail because that's what we want to do. Where my wife is in the Pandora stores, every 4 hours they do this. 4 hours, not 4 days, 4 hours. Now, do you think somebody's sitting there and calculating and with a pad? No, they just run a report. The report comes up from the computer and say, okay, we got to do this, we got to change this, we got to change that, we got to do this. 4 hours for in retail. Now, do
So,
you need to
Raju,
do it? Do
in
you
other-
need to do it? Pardon?
One question. They do that because they want to break even make sure they're making profit or break even every 4 hours? Or
Right. Let me put it this way. If every 4 hours I'm above break even, how do you think I'm going to finish at the end of the day?
yeah.
I made money at the end of the day.
Mm-hmm.
Now, we all know that sometime in the mornings we are slow. So in the morning, yeah, there's not much traffic. On a Tuesday or Wednesday morning, there's not much traffic. And then in the afternoon, it gets busy. And then the evening, it gets busy. But then at the end of the closing, it gets very dead. You are able to adjust. So what they do, and the way we do it there is we have goals for those 4 hours. And the goals will tell you if you're going to make it or not. So they review every 4 hours based on the goals. So if this is what it's supposed to be every 4 hours, I want to see money here. As much as
Raju, but when they do it so often, they cannot change the variable cost. So they can only playing with the price.
right. So they only they can't change the price either because Pandora sets it up. It's a franchise. We cannot change the price because I want to.
Okay.
I cannot even give a discount even if I wanted to. So the only thing that we can control is sales.
Okay.
I can't control. I
Increase
cannot
the
control
number
this.
of sales. Increase
Yeah,
the number
that's
of
all I
sales.
can control. So then what we tell the salespeople is push. I don't care what
Okay.
you do. Then those are the KPIs we touch tomorrow that we're going to bring in tomorrow. Then what can we do to make a difference? You know, when you have franchises, you can't give discounts. You can't do a lot of things. So your hands are tied.
Yeah, but the beauty of this exercise, Raju, is like as we did in the first slide, is that if you do it every month, you know what, this month for every $1 that I sold, I only make 20% versus last month that I did 25%. So what did
Right.
I change? What did I do wrong? Or
No,
what did
what
I
I
do
think-
right if I'm making more profit from every $1? So
I have
that's the beauty.
like I told you initially, I have a client that does it every day. At the end of the day, he runs his gross profit. He needs to be at a certain level. How do you think a car dealer sells product? They do a gross profit every day, every week, every month. You have technology to help you. In the old days, we couldn't do this, but that's how I do it. So the questions I always come up with, and I always point out, or this is one of the things I try to bring up is, where do you think the term Black Friday came from? The ones who have been in my class before, I will appreciate it, because I use this example, not to say anything, but all your new ones, how do you think, where did the term Black Friday came from? What does Black Friday mean? Anybody?
Sales. You go,
Pardon?
it's Black Friday, you go to get discounts, specials.
Right.
Offers,
agree.
yeah.
Yeah, but why is it in December, November? Why not in July? Why not in February? Why not in May?
We need to put another inventory to sell.
You're not going to carry inventory for the whole year and end it in November. That if that's a problem, that's another problem we have.
Well, that's what I do. I in my Black Friday, I get out of my old inventory.
Right, but okay, that's fine. You're okay on that, but there is a logic for that. The reality is break even.
Right.
In the olden
In terms of profit.
right, when that's in the old days, we didn't have computers, so they had guys like us in the back room sweating behind, and we are just running numbers on a spreadsheets by hand. And we will tell the owner, Mr. Owner, Mr. Macy's, or Mr. Jesse Penny, you know what? You're gonna hit break even somewhere in November, maybe end of November. Okay, that's when you hit break even. So what they did was, what does break even mean? Remember, break even means, like, the first thing is, I don't make any money, but I also don't lose any money. Okay. My fixed cost is the same. That means I hit break even. So now every sale I do after Black Friday is pure profit.
Yes.
100%. It goes. Remember, this is almost like zero. So I make more money. Yeah, my gross margin dollar becomes profitable. So all money. Now I can give you a discount because I want that extra sale from you. So I'm willing to wheel and deal with you to get you in because everything is covered. All of this is covered. Now I'm playing with $6,600. Okay, I have extra money. So now I can wheel and deal. I can do a sale. I can do a promotion. I can make a little bit less money, or be under profit. Be really tight on margins to sell that product and get more money, because every piece I sell is income. It goes straight to the bottom line.
So now you understand why it's so important to keep your profit and loss up to date and to know your break even. So you can, with those basic numbers, you can play a lot and take very important decisions. I think I have really, Raju, you have done an amazing work to help us, all of us, explain everything in very detail. So I know we have 3 minutes left, but we started 15 minutes late. So I want to ask Raju to continue a little bit more to cover markups and margins. But tomorrow we are going to start on time.
Right.
Okay. So
hopefully I'm doing a good. Hopefully I'm interesting you enough so you're tomorrow a little bit early.
No, you are doing very well, Raju. Thank you for making it like really 1 + 1 2, because that's what we love in finance.
So
okay, go ahead.
I'm going to ask you a simple question. Do you know the difference between markup and margins? Anybody? I want you to be honest, because you have to understand. I have dealt with business owners who do millions of dollars. They can't figure this one out. They know about both, but they don't know how they're using it or when they're using it. So there's no wrong answer here. I want you to understand, because this is sometimes very basic, okay? But sometimes we get busy with all the other things and we don't think about some of the most basics.
So Raju, Elmer says no. Who else? Who thinks is the same? Who thinks is different? Any other comment?
Stably, I've known we've done work in the past. Maybe you want to.
Stacy thinks it's different. So, okay. So Raju, why don't you tell us?
Okay. The difference is right here. For example, you sell bicycles for $200 each. Each bicycle is $150. You find the gross profit. Obviously, it's 200 minus 150. Your gross profit is $50. Simple, straightforward. To find the margin, you divide by the revenue. Okay. By the revenue. Okay. So what happens is you take the $50, which is your gross profit, you divide it by the revenue, which is $200. Your margin is 0.25, which is 25%. Okay. That means you keep 25% of your total revenue. So you sold it for 200, you keep 50, which is 25%. let's start looking at markups. Markup is the same. You still find the 200 minus 150, so gross profit is 50. The difference is I'm doing it by the cost of goods sold. I'm dividing it by the cost of goods sold. I just changed the denominator. I did not change anything else but the denominator. So I'm taking the $50 and I divide it by 150, which is 33%.
Is it clear the difference, or shall we go back to the previous slide?
That means you sold a bicycle for 33% more than what you paid for. That's it. That's all you did. You're using the markup, you're using the product, you're using the cost to come up with the margin, so it's a cost plus. And the other one is by the revenue. Now, QuickBooks and all of the accounting will do it both ways for you. But you need to know which one are you using when you're doing your pricing. Both of them are correct. 33% is correct, 25% is correct. Both of them are correct. Which method are you using? Is the question.
How
So
do we know
question.
which one is better?
Pardon?
How do we know which method is better?
Well, both methods are right. It's just you have to be consistent with which method you're using. Guess what? Here we're using margins, which is fine, but retailers use markups. 2 times or 3 times, keystone, all of those nice words that we throw out, they're using markup.
So let's do the example with the cup of coffee, Raju.
Right.
So they are very clear what is markup and margin.
Your QuickBooks and your accounting will do it always on margin. That's why they give you the margins.
So let's look at the exact numbers. So let's look at with the cup of coffee. So it's
Okay,
very
the
clear
cup
for
of
them.
coffee, the margin is $1.35 divided by 2.
That is the
It's
price of the coffee.
Is 67.5%. So you take the $1.35 and you divide it by 2.
And that is the
That is 67.5%.
yeah, but what I'm trying
That
is
is
you
your
to say
margin. That is your
margin or markup. Yeah.
Okay.
Raju,
Yes.
For understanding everything about it for calculating my price, I did a Excel. I look maybe how I share my camera, my I don't know. Oh, look, is I put the profit, okay, and you see.
More or less, I can see the pink.
Fabiola,
I see
it's
the pink and the
difficult
yellow.
to see. It's difficult to see.
See.
But maybe at the end of the class, you can ask Raju.
And if you want to share, then we'll allow you to share the screen at that
But
time.
let's finish the class so we can ask. Then
Right.
we can ask all these questions.
Okay, so I was going to ask you, tell me the break even for the 3 years of Zen. So what you will do is you will take this number and divide it by what number? Elmer? You take this number, this number, 82,647, and you divide it by your gross margin. That's it.
By the
Gross margin. What I want you to understand is this is how simple it is, but understanding the
Raju, but
concept
can you
is-
write it with the pen, the answer, so
that-
they see the answer?
I'm trying to see. I'm trying
Because
to
I
see
think
why
people
I don't-
understood, but they just forget the terminology. What word means what. So if you can write it with the pen, then they will see how simple it is to have this spreadsheet.
I'm trying to undo this, redo a spotlight.
You have to go to annotate and click on the pen, or you can also click clicking one that I think it says text. There's one that says text and it allows you to type. Or a letter. It has like a letter.
Okay, here, text. I'm going to do it by text. So what you will do is you take the 82,647.
That is the total expenses.
Which is the expenses, okay? Which is right here, 82,647, and you divide it by your gross margin. Now, the gross margin we already found out was 76%.
And show them how you got it.
And the gross margin we got is equal to 123,424 divided by sales, which is 162,400.
Yeah.
Which is equal to 76%.
So you see, guys, now you are experts in 2 seconds. Yeah,
Which
questions.
This one is equal to 108,746. So I don't have to sell 162. I need to sell 108 to break even. The fact that I sold 162 allows me to make a $40,000 profit.
Yeah.
Even with the increased expenses that we already found out how much it is. So I raise my expenses, I have a salary, I have payroll, I have a lot of other expenses, but I could have sold 108 and I would have been with it. Now, obviously this $40,000 is great because I can borrow money, I can get more location, I can get more inventory, I can do a lot of things with that 40,000.
So just to summarize a little bit what we learned today. We learned from how to know how much profit I'm making from every dollar, how much I'm spending in what percentage is my gross margin that is based on the gross profit and my break even. So what is the minimum I need to sell? So if you see all the exercises that Raju did today come from this page, the profit and loss. And basically he has touched the lines that are in black. So the cost, total revenue, total cost of sale, gross profit, total expenses, and net profit before taxes. So if you can also go look at your finances, print your profit and loss, and play a little bit with it, you will really be able to master these basically ABCs of finance. Questions or doubts for Raju? Feel free to ask, it's okay.
Yeah.
Tomorrow we have another class. So anything that you need to work deeper. Okay, what you don't understand the difference of what?
You don't understand the difference? Yeah. Is it
Markup? Okay. And
markup?
And
okay,
margin.
Let's go back to that one. Okay.
Thank you for asking.
Yes.
Because that's the idea, that we clarify everything. I think you have to go to the trash, Raju. Yeah. I think the text is working beautiful. When you type in the text.
It's easier for me. Yeah, I'm okay with that. Now, the difference is you take the gross profit.
But Raju, can you do it with the profit and loss? Both examples? So they see where you would take the numbers. I think that's what will clarify.
Okay, so we can do with, but you want to know the markup. There's no way I can do the markup on this. I need to see how many units and pricing, I mean.
Let's assume one number.
Well,
Or with Suri, yeah, with Zen, maybe.
but my question is, we want to know the markup, you know. I need to know the units we are looking at, or the pricing we are selling it at least. So if you look at it from that's why it's not as easy as like, you know, that one. So let's say the price for the product is $100, okay?
I have a example, if you
Okay.
want it.
Yeah, that would be good. Give me.
okay.
You were, yeah, the price for the product in this example.
Okay, let's say the price of the product is, I mean, the easiest way to explain it, because that's example, we did it with that idea in mind,
Yeah.
you know.
Yeah.
Or let's rewrite it, but typing the case of the bicycles. So
Yeah, the bicycle, that's what I want to go back to. I'm going back to the bicycle. Okay. You sell the bicycle for $200, but it costs you $150. So your gross profit is $50. That's what you made on every sale. So I take the $50 that I made per bike and I divide it by the revenue, which is a $200. That gives me a 0.25% margin. Okay. The difference between this formula, which is $50 divided by 200, is $50 divided by 150, which is your cost. Your cost of 150. That's why it jumps to 33%. So this is your markup. 33% is your markup. 25% is your margin. Both numbers are correct.
So, sorry, I don't know. Mukatite Juice. What is your name?
Oh,
Her name is Martha.
Martha.
Hi, my name is Martha.
correct.
Yes.
So Martha, what I want to see, look at the block number 1 to the number 4th, the block number 4th.
So the
You
thing
see
is,
the divider, the number you are using to divide is what makes the difference.
right.
So here you take the gross profit for the markup and you are dividing it for the cost.
Which in your case is $2.50. But what is your gross profit? What is this number on top?
So for your juices, what is
Okay.
what is the price that you sell for your juices?
In the shelf, $6.69.
Sorry?
The price in the shelf or the cost price?
No, the price in the shelf and then the cost of the raw materials. We need both.
Okay. Look, the price in the shelf is $6.69.
$6.69. Okay.
Yes. And the price for cost is $2.15.
$2.50.
$2.50 or?
Sí, $2.50.
$2.50. Okay.
Yeah.
So what happens is, in your case, this number where it says $50, it'll say $4.19.
So that is the difference of $6.69 minus $2.50.
Okay, let me put it to you this way, right here. I'm going to type it in. So it's 6.69 minus 2.5 is equal to 4.19. Okay?
Yes.
This one you will divide by, instead of 150, you're going to divide it by $2.50. So it's 419 divided by 2.5 is 167%. Your markup is 167%.
So that's your markup, because you are dividing the difference between the cost, the price you sell it versus the cost of the product, divided by the cost of the product. Okay, that's markup.
Okay.
Now, you want to know how much is the margin?
Yes.
Okay, the margin will be like this. I take the $4.19, okay? I divide it by what price you sell it for, 6.69.
It's at 0.62.
Yeah, I think, Raju, also in Spanish, imagine if we say it more in Spanish, the markup, remember, we are doing it versus the cost, our cost. So I don't know if you can see me on the screen. This is the total. When I sell it up here. But this is my cost. So the markup, the margin is the markup is from the cost. This is the markup. So what is how much is it between my cost and the price that I sell?
Right.
What we say margin is the other way around, because margin I'm calculating it from the number above. So
Right.
what is this difference between my high price and what I pay for cost? Yeah.
See, the difference is, one, I'm dividing it by, one second, why isn't, okay, one, I'm dividing, the 2.5 is my cost, and the other one is my selling price. That's the only difference. It's still the same 419. I'm just dividing by cost and the other one by selling price. That's it.
So we are just calculating that space between of the cost that I have and what I sell, that space. But we can say it in two ways. Either how much do I need to add from my cost to reach to the price that I want? Or how much is how lower I need to go to my cost. But the number at the end, even though there are two different percentages, it means the same. It's just that, imagine if I have $100, maybe let's make the exercise with 100, Raju, so they really see it over 100. What is the difference?
What do you mean 100?
So if I sell something for $100, if I sell my phone for $100, but it cost me 80.
Okay. So the $100 is 100 minus 80 is $20.
Yes. So that is my gross profit. Okay.
Yeah, so it's 20.
20.
Okay.
So now to know the markup and the margin is different, because if I divide 20 divided by 100, that will give me
20, yeah,
the
divided by
margin.
100 will give me 20%.
That is the margin.
Okay. And the other one is $20
20
divided by
80.
80.
That is my markup.
Right.
So it's always showing that space, that 20, that 20.
That's 0.25. That's 25%.
Yeah, because if I use 20 both cases, it won't add up. If I just think, so 80%, 80 times, if I multiply 80 times 25%, it will give me 100. No? But if I take 100 and I subtract 20%, it will give me 80. So it doesn't matter how I look at it, it is the same numbers, but it's expressed different.
It's just expressed differently. Both of them are correct. You just need to be very consistent in which method you're using. You have to be very consistent. If you're using markup for your retail, that's fine. You can use that. That's no problem. But when you go and look in your QuickBooks, which produces it in margin, don't think that you're losing money. It's just that they're using a different method to calculate it. And for you to make sure that it's the same, you got to click in QuickBooks, hey, I want it by markup, not by margin. And they will switch it for you. They tell you what the markup is. And you can compare them apples to apples. You cannot compare 20 and 25 the same way because it's calculated different.
So I just put something that Alexis sent me that is the same that Raju has in the slides, but not to change the slide. So margin is the total sales minus the cost of goods expressed in as a percentage, and then markup, the selling price minus the cost of product.
Right, and that
So
was
is-
shared from Akil in the group. So thank you for putting that in the chat to us. We appreciate it.
Okay, thank you. I don't know who put it, but thank you.
Right.
So I think you need to practice with your prices and then multiply again by the percentage to really be able to get the feeling.
Right.
Okay.
But just mind you, whichever method you use is fine. Both of them are fine. Just understand which one you're using and be consistent throughout your whole product line and not do it one way this way and one way that. Okay.
Thank you, Raju.
Okay.
Any other question? Elmer, you have the hand up.
Yeah. Emma, you have your hands up?
I'm gonna work with Raju. I will find a way that you connect with Raju through the SBDC. So all your special cases, we can find, I know right now you are with the navigator, but we can find a way that, so let us know if you want to talk specifically with Raju.